Brian Shannon from AlphaTrends.net. Today's Friday, the 3rd of September, and we had another positive week for the most part. Financials pulled back a little bit, as did the Dow, but the Nasdaq and the S&P and the Russell 2000 all higher, and semiconductors added some as well. So let's take a look at the action here on the daily time frame. Of course, we're still in a primary uptrend, and to try to be short this market would be foolish. We are also riding that 5-day moving average nicely here on the 15 and minute time frame. That's where we are now. You can see we tested that today, and it was a quieter week for the market, but the fact is we're still making higher highs and higher lows, and the buyers get the advantage here. Our near-term level we want to see hold next week is probably 550 and a half, and then these prior levels below that. The Nasdaq, also we were looking at this as continuation higher, and it in fact has done that, and you can see how it's just riding that rising 5-day moving average since it recaptured it on that gap late last month. So higher highs and higher lows, you can't argue. Next week, I think that this level right in here is our first important level we want to see hold 378. And even if we break below that, what's the downside risk? Maybe to the 20-day moving average. The fact is we're in an uptrend. The Russell 2000, I had been pointing out here that I thought it was time to be involved and that you didn't want to buy a pullback, but we got a pullback on Monday, and then the proper place to buy is not on the pullback because we don't know if it's going to continue to pull back, but instead to buy as it shows strength once again and merges out of there. Not necessarily the breakout, but as it gets back above, for instance, the volume weighted average price for that day on Monday once it recaptured that. So now the buyers remain in control. I think worst case stop probably goes underneath this low right here near 224. I think that's about what I'd pointed out last week. So maybe, if you're looking at it from a shorter term perspective, you put your stop up underneath one of these higher lows. But we're riding the rising 5-day moving average, and it looks like we're headed for a test of the upper band of this bigger range that we've been involved in. That range, of course, being defined by support down near 210 and resistance up near 232-ish, 233. Who knows? This time maybe it continues to move higher. We'll take it one piece at a time. I'm not here to be outrageously bullish and say we're headed to all-time highs. That's never my style. Instead, it's to take it one piece at a time. If it can pass the test on one time frame, then we go on to look at the next time frame, etc. Semiconductors, I thought, were a little bit extended on last Friday, and they were. So it took this week really more of a digestive property through time. And here's our volume weighted average price on Monday. We gapped up, and we spent Monday, Tuesday, Wednesday, and Thursday underneath the week-to-date volume-weighted average price, but buyers came back in once again today. So now I think this is going to be a key level in the near term, near about 268. I think it's safe to hold an intermediate term swing trade in the direction of this primary trend, an intermediate term trend, with a stop down near that 268-ish level, again, for an intermediate term swing trade. Biotechs continue to move higher here as well. It was good that they finally took out this resistance. This is where I'm suggesting a stop goes for swing trades. I've been raising the stop up underneath these higher lows, and it again looks like these guys are headed for a breakout. If they do, in fact, break out past this level, I think it's a perfect opportunity to sell a little bit of what you've purchased lower and feed it out to the people who are chasing. Feed some to the people who buy the semiconductors on a breakout after a 10% move, etc. Don't be the late money who chases and wonders why breakouts don't work. The financials, digesting a little bit in here, they broke below their 5-day moving average this week, and they have this pattern here below the declining 5-day moving average, and that pattern is lower highs and lower lows. So it tells us, yes, the primary trend is higher, but there's no reason to be a buyer while it's still in pullback mode. We have potential levels of support, such as a 20-day moving average. It didn't hold this week. Doesn't mean it might not jump back above it early next week, but for now, instead of being long financials from a swing trade perspective, it's better to be on the sidelines in cash waiting for the better opportunity where you have the wind at your back and the buyers are actually in control. Last week we mentioned some stocks, one of them being AMD. I was looking for a pullback. Instead, it gapped up. It ruined the risk reward. It's still stuck below the week to date volume weighted average price. So perhaps next week, if it can get above about a 111, 111 and a quarter, that AMD can come back into alignment with the rest of the semiconductors. I would definitely keep an eye on them. The 20-day moving average is now flattened out, and it looks like, we've still got a great pattern in here. Anyone who's purchased so far seems to me to be a little bit early. Not necessarily wrong, but I haven't purchased this stock yet simply because I'd rather be late and right than early and wait all week for nothing to happen and have my capital tied up in a stock that's doing nothing, underperforming its benchmark. Netflix we spoke about as well as far as a continuation pattern, and it certainly did. So big move in Netflix. If you're involved in that, the name of the game is to raise your stops. We've mentioned Tesla last week, and it looks like to me it's probably headed towards that 780 level still. LAC was a big one. It did gap higher on Monday, which made an entry a little bit more difficult. Personally, I buy it when it gets back above the VWAP, which was right in this area, and it's had a really nice week holding that rising 5-day moving average. Stops should be, I've taken some profits. Stops should be raised. I think your worst case stop on at least half of it would be below the low that it made today. Otherwise, it's a great looking chart and continues to move higher. Shares of Beam, I mentioned that I like this one above that 109.50 level, and here we are raising stops in this one as well. I've got a 2/3 position left in that one. Monster, it did violate the gap in here, so I'm long this one, but it violated the gap this morning. However, I never set my stop before the market opens for the simple reason that they often steal your stock from you. Instead, I wait, put my stop below the low of the day, and then see how it plays out. I've currently raised my stop to, or actually I've lowered it down to this level right here. Hope you enjoy your long weekend. Thanks for tuning in, and I'll talk to you next week.